It has been a turbulent start to the week, to say the least. Shockwaves have been sent across global markets, and it all started with a pretty dramatic event in the digital asset space that has, well, everyone talking.
Okay, let's just take a second to look at this number. This isn't a company's quarterly loss or a dip in market cap. No, this is how much a single trader lost, almost instantly, during a sudden sharp plunge in Ethereum. And that one event, that was the epicenter of all the market turmoil we're seeing today.
Because you have to understand that one staggering loss wasn't just some isolated incident, it was really a symptom of a much, much larger global sell-off. It was triggered by what you could only call a perfect storm of factors that just rippled across every asset class imaginable.
What we all witnessed was a classic domino effect. You had this sharp, simultaneous drop in both gold and Bitcoin, and that immediately forced investors to cover their leveraged positions. This wave of margin calls then created a cascade of forced selling, which of course just pushed futures and other asset prices down even further.
But here's what makes this whole situation so tricky. The economic backdrop is, well, it's confusing. Investors are trying to look at the big picture, and they're just seeing completely contradictory signals everywhere they look.
So what's really at the heart of the issue? Investors are caught in this massive tug-of-war between two powerful opposing forces. You've got one side telling them to be optimistic about the future, while the other side is just screaming that there's a crisis happening right now. And this right here, this lays out that conflict perfectly. On one hand, you've got some genuinely positive long-term signals. We're seeing alternative data that points to U.S. inflation finally cooling off. But on the other hand, all that optimism is just being crushed by a severe, short-term liquidity crunch that's forcing everyone to sell, sell, sell.
Now, at the same time, there's another major source of global fragility just kind of bubbling under the surface. This number, this is the size of the Japanese government bond market. It's a massive, systemically important market, and it's teetering on a very, very delicate balance.
You know, that's how insiders are actually describing the situation in Japan. It's this high-stakes standoff between the government, which absolutely needs to keep borrowing costs low, and the market, which is pushing for higher rates. It's a paradox that's preventing a major debt crisis, for now. But it's a fragile piece, and any crack in this massive market could send shockwaves across the globe.
Okay, so with that shaky global backdrop, let's zoom in and see how the crypto world itself is responding to all this intense pressure, both from inside the house and from regulators looking in.
You see, a market crash like this doesn't just wipe out financial value. It kicks up a ton of dust in the form of rumors and accusations. And one of the industry's biggest players, Binance, has found itself right in the middle of it all, battling these wild conspiracy theories that had actually played a role in the meltdown.
So you have the exchange's former CEO Changpeng Zhao coming out and publicly very forcefully pushing back. He's basically saying, nope, not us. He's rejecting any and all claims that the exchange's systems or actions made this historic liquidation event any worse than it already was.
But, you know, talk is cheap. So, in a powerful move to back up those words, Binance is putting its money where its mouth is. The exchange has started the process of buying $1 billion worth of Bitcoin for its user protection fund. That's a very clear signal meant to restore confidence.
And while all this is going on, the global regulatory picture is just getting more and more fractured. You've got India doubling down on its strict stance, adding new penalties for traders. And then, in sharp contrast, you have Hong Kong pushing full steam ahead to become a digital asset hub, even preparing to issue its first ever stablecoin licenses.
Now here's something that's so important to remember. Even during a crisis, capital and technology, they don't just disappear. They pivot. They find the next frontier. And right now, a really fascinating trend is emerging from the ashes of this crypto downturn.
It's a great question, right? During the crypto boom, billions upon billions were spent building out these massive, energy-guzzling data processing centers. So, what happens to all that expensive computing power when the market turns?
Well, here's the clever part. It gets a second life. Companies like CoreWeave are the perfect example of this pivot. All this powerful infrastructure that was originally built to mine cryptocurrencies is now being repurposed. It's becoming the quiet backbone of the incredibly power-hungry AI revolution, training the next generation of algorithms.
And hey, despite all the chaotic headlines, don't think for a second that smart capital isn't flowing. We're still seeing major deals get done. A firm linked to the Kraken exchange just raised $345 million in an IPO, and the Solana ecosystem saw a cool $35 million investment to bring a popular prediction market onto its blockchain. The money is still moving.
Okay, finally, let's connect all of this digital turmoil back to the physical world. Because the lines between code and climate, between pixels and real-world infrastructure, well, they are blurring more than ever before.
I mean, just think about how all these things are connected as sources of financial risk and opportunity. Melting Arctic ice is literally redrawing global supply chains. A single winter storm in the US can be powerful enough to measurably impact the entire Bitcoin network's processing power. And while that's happening on Earth, nations like Singapore are looking up to space as the next big economic frontier. Every single one of these physical events can ripple right back into the financial markets.
And that really leaves us with a final, crucial thought. Our modern economy is this deeply, deeply interconnected system. So the next major shock to the market, it might not come from a trading floor in New York. It could just as easily come from a line of code in a DeFi protocol, a melting ice cap at the top of the world, or maybe even our ambition to build an outpost on another planet.